Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, November 30th, 2010. This morning I'm talking about scared money. And as you can see here in the markets, just looking at the board right over here, we've got a lot of red on the screen, which means that we've got some risk aversion going on in the marketplace. Now, we've talked about recently about the European debt crisis, about the contagion, about how, the Irish bailout, people are worried that it's going to spread to Portugal and Spain, and that appears to still be a major issue going on over there. We also have, I talked yesterday about a little bit about the Korean conflict. That still hasn't been resolved. And then also we got news that, that there's going to be a potential Chinese slowdown, that they may increase interest rates to try and ward off some of the inflation they're seeing there. Now, of course, they'd probably just be better off letting their currency appreciate a little bit, but I don't think we're going to see that happening. So, there's all kinds of risk in the market today, and that's why we're seeing risk aversion going on here. So out of the Eurozone, well, actually, let's just look here. I'm looking at dollar versus the loonie. Okay, you can see there's dollar strength earlier. And right here at 8:30, we got the Canadian GDP report. The monthly figure came in showing a contraction in the economy of 0.1% versus an expected gain of 0.1%. So that caused the dollar strengthen significantly, although we can see we're giving back a little bit of gains here. Now we'll just take a quick peek at the euro. Euro versus USD. All right, sitting right 130, traded below there, 129 handle earlier today, and we're right there now. Now, we do have this problem in the Eurozone with the bond markets and bond vigilantes pushing yields higher on these PIGS countries, namely Portugal, Spain, Italy. These are going to be the next chips to fall, so to speak. Now, I spoke earlier when we were talking about the whole Irish debt deal that, the ECB really needs to step up here and do something to help these countries out. Otherwise, it's going to seem like they're actually allowing it to happen. Now, the ECB is a Frankfurt-based bank. It's got a lot of German influence, and some are saying, hey, Germany's sort of putting all these guys out the pasture. They don't want to take the losses. They've actually experienced a lot of the gains, and they've been allowed to, experience this great surplus due to their inclusion in the Eurozone. And now that these other countries are in trouble, they're really sort of turning their back and throwing them under the bus, so to speak. So we're going to have to see what happens there. But German unemployment rate actually stayed steady, and total job losses last month came in smaller than expected. We had Eurozone CPI data, which came in as expected, so everything seems to be about normal there. I just want to show you Japanese yen showing additional strength as we get these risk themes going on in the Pac Rim. Now, overnight, Japan had an uptick in their unemployment rate up to 5.1% from an expected 5%, so that's not too horrible. But right now what we're seeing is we got safe haven assets that are leading the charge this morning. We have gold higher, we've got the dollar higher, we have the yen higher, and also the Swiss franc. Don't talk much about the Swissy, but that's a good European safe haven asset as well that we'll sometimes see. So that's kind of what we're looking at today. It's just another day of risk in the market. And, when you get these risky days in the market, a lot of times people, kind of run around saying, oh, where should I throw my money? You can see that they're not taking on these carry trades, okay? Aussie JPY, that's a great carry traded pair. That's being unwound. Okay, we can see that the pound is lower. Just want to show you here the pound. Actually, it's bounced back a little bit, but we can look over here on the 2-hour chart. You can see the pound's been a lot lower versus the dollar. Now, the pound, they do have some exposure to this European sovereign debt crisis as the UK banks hold a lot of that debt. But by and large, the UK appears to be operating all right now, and I don't think they're too upset about the fact that the pound is selling off a little bit, as that's going to help their exports and their economy. So, we see that euro versus the pound, though. If we look there, okay, you can see the euro's been declining steadily versus the pound over the past month. So, we've got risk in the market. That's basically what we're looking at. And today, we may see the end of the era of extend and pretend. Today, President Obama's meeting with the new majority in the House of Representatives, Republicans, today to discuss, economic action going forward. And the policy of extend and pretend has been going on for some time, and that may all come to an end as the Republicans through the Tea Party mandate have been people are asking them, hey, stop the spending. So we could see a slowdown here. If China slows down, the U.S. slows down. We've got the U.K. slowing down. They've already imposed their austerity measures, and then we have Germany basically force feeding the rest of the eurozone, trying to force these bailouts at them and get their austerity going. We could see another global slide here. So it's going to be interesting to see how this whole thing plays out. And we'll also talk about China. That's going to be interesting to see what they end up doing over there. Whether they raise rates. If they raise rates, are they going to be able to control that currency like they do? I mean, it's easy for them to do in their country, but if people start moving out of there, and if they have problems with their exports, there could be a lot of implications there going forward, and basically it's sort of like a dam that's getting set to burst. So we're going to have to see if they can do that. But for now, hey, why worry? Just trade, and that's what I'm going to do. So that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.